Hey everybody, so this is going to be part 3 of my balance sheet basics series. And in this video, we are going to talk about non-current assets. So non-current assets, these represent assets that are illiquid and whose value is unlikely to be recognized within a year. So this can be broken down into these categories. PP&E, which stands for plant, property, and equipment, long-term investments, and intangible assets. Now, we are going to focus mostly on intangible assets because it is probably the most complex part. But we're still going to briefly cover PP&E and long-term investments. So PP&E, this stands for plant, property, and equipment. And these are tangible and long-lived assets. So this could be buildings in use by the company, land in use by the company, machinery, vehicles, furnitures and fixtures, or natural resources. So this could include mineral mines, timber tracts, or oil wells. So it's going to vary a lot depending on what industry you're looking at. So obviously, if you're looking at a company like ExxonMobil, then yeah, you might see something like oil wells. And if you're looking at a tech company, then yeah, you're probably not going to see natural resources on there. Now let's talk about long-term investments. So essentially, these are investments that have a time horizon of over 1 year. And these don't necessarily have to be related to operations. So this is also very dependent on management's intent. So I could have a 10-year bond and I could hold it to maturity. So what this will mean is that I am getting interest payments throughout the entirety of 10 years. And at the end of 10 years, I'm going to get the entire face value of the bond back. So that would be an example of a long-term investment. Now, what if I bought like a 2-year note or something, and then immediately I traded it? So I sold it. I got rid of it right away. Is that a long-term investment? No, because my intent was not to hold it throughout maturity. So my intent was to just sell it right away and book a profit or book a loss or whatever. So long-term investments, it all depends on a management's intent. Now, we're going to get to the juicy part, and that is intangible assets. So these can grant exclusive rights to a company to provide a product or service. Now, goodwill is the exception to that, and we're going to talk in depth about this one. So we can also see patents, software development, copyrights, trademarks, and client relations. So how do people actually go about valuing something like a patent or software development? So let's just create an example here. Let's say that I want to purchase a patent from another company, okay? I purchased that patent for, let's say, $2 billion. Now, on my balance sheet, what I'm going to do is I'm going to basically capitalize that patent, and I'm going to put it on the intangibles on my balance sheet, and that amount is going to be $2 billion. So I basically record it at the cost that I paid for it. Now, what happens if I developed the patent in-house? Well, what essentially happens is all of my expenses that went into developing that patent basically gets capitalized and it gets moved onto the balance sheet. So, let's say I developed this patent and all of these expenses, it was $3 billion. So I incurred this $3 billion expense. But then when that patent comes out, I move that $3 billion expense and then I move it over to the balance sheet and it becomes an intangible asset for me. So that's essentially how that works out. Now, client relations, this can be something like determining the future benefits of all of these relationships that I have with these clients. So for example, let's just say I have a bunch of contractual obligations with all of these clients, and I assume that within the next 5 years or something, I can make like $10 billion off these people. So that's essentially what's going on there. Now let's go ahead and take a look at Teladoc's intangible assets. Now I'm switching things up. I'm moving over from Microsoft to Teladoc because generally when you're looking at a health services company, you're going to see a lot more intangibles. So right here, this is Teladoc's balance sheet. And keep in mind, these numbers are in thousands. So this little red box represents all of the intangible assets. So this is goodwill, intangible assets net, and operating lease right of use assets. So this is a very common format where you're going to see this, especially this intangible assets net. So they have a lot of these different intangible assets, and this is basically just this umbrella account, just saying, hey, these are all of our intangible assets, and not including goodwill and operating lease right of use assets. And we're just going to put it all into this one account. And goodwill, let's just talk about goodwill very briefly. So goodwill is essentially everything that you're paying above the book value when you're acquiring another company. So for example, let's say I purchase a company for $10 billion, okay? But the book value of that company is only $2 billion. So that means I would book a goodwill asset, an intangible asset of goodwill of $8 billion. So that's kind of how that works out. Now, operating lease right of use asset, this is basically just me borrowing or leasing an asset. And then this is just my right to use the asset. I do not own this asset. So I'm not depreciating the asset or anything, but I am amortizing this right of use. All right, so goodwill. So like we said, goodwill occurs when a company does an acquisition. Now, goodwill is the excess paid above the company's book value. So I'm not 100% sure how they go about determining the company's book value. But I would assume that the company that is purchasing the other company, I would assume that they would bring their own valuation specialist to reevaluate all of the company's assets and liabilities, come up with this net asset figure, and that is what they're essentially putting down as the book value of that company. And then everything that they pay in excess, that's going to be booked as goodwill. So right here, if we're looking at Teladoc's goodwill, it says note 7, goodwill consists of the following in thousands. So here we could see a beginning balance as of December 31st, 2021 and 2020 respectively. So this is the most recent quarter. So it's the September 30th, 2022. So here we can see that they started with 14.5 billion. They have this impairment, and this is reducing the amount by 9.63 billion. And essentially the ending balance is 4.84 billion. So we can see that this amount decreased substantially. This is a huge, huge, huge drop in the value of the goodwill. So we're going to talk about this impairment charge. So what is impairment? So it's a reevaluation of an asset's worth and occurs when an asset's value on the financial records are higher than the market value. So this results to a reduction in the value of the asset, and it's treated as a one-off expense. So this is not actually a cash expense. So when the company, when they acquire the other company, that is when the cash is going out. But this impairment charge, this is not a cash expense. This is just reevaluating the value of that goodwill. So let's say that my goodwill is, let's just say it's $10 billion when I purchased this company, okay? But then later we realize, hey, you know what? Maybe we overpaid for this company. Maybe this goodwill should have only been like $3 billion. Well, then that essentially means that I'm reducing my goodwill by $7 billion. And that's essentially how that works out. That's why people are a little bit weary when it comes to, when it basically comes to intangible assets, because you see things like this. So going back one slide here, this is a massive, massive amount. We literally shaved off over 50% of our goodwill valuation here. So yeah, I mean, this is a pretty scary thing to see. Now let's talk about Teladoc's impairment. So Teladoc, they purchased this company. It's called Livongo for $18.5 billion, okay? Now, I believe this was, if I recall, it was both cash and stock. So right here, it says Teladoc's current market cap is $3.83 billion as of January 2nd, 2023. So this is kind of crazy because they purchased this company for $18.5 billion. Right now, the market cap of this company, Teladoc, is 3.83 billion. So they severely overpaid. Now take a look at this little disclosure note right here. It says goodwill impairment charge. We have experienced a pair of triggering events in 2022 due to sustained decreases in our share price, prompting impairment assessments of goodwill and long-lived assets, including defined-lived intangibles, first as of March 31st, 2022, and again as of June 30th, 2022. So essentially, they're saying that, hey, you know what? Because the share price dropped so much, we had to do this impairment assessment on both of these days right here. And we basically assessed that, hey, you know what? We basically severely overpaid. Now we got to mark down this goodwill value that we put on our balance sheets. So that's kind of what's going on there. So now we're going to talk about this intangible assets net, this umbrella term. So Teladoc, they go ahead and they show us this table of each intangible asset, their useful life, and the amortization of the items. So this is note 6 on their financial statements. It's called intangible assets, net, and certain cloud computing costs. So right here it says intangible assets, this is in thousands. So right here it says client relationships. This has a useful life of 2 to 20 years. Now right here they say the gross value is about $1.451 billion. Now they're amortizing this over its useful life. So essentially they're marking this value down by $267 million here in this quarter. So now they're saying that the net carrying value, this is what they're putting on their balance sheet. So this net carrying value is the amount that shows up on the balance sheet, is 1.1 billion. Now they're doing a weighted average of their remaining useful life of this asset, this intangible asset. And they're saying, hey, you know what? The useful life of this intangible asset is 13.9 years. How they determine that, I don't really know. But let's just go on to the next one. So they have trademarks, software, technology. So here for their trademark, they're saying 2 to 15 years. And then they're saying that the gross value of this is 324 million. They're marking it down through amortization of 84 million right here. And the net carrying value is 239 million. It has a useful life of about 7.1 years is left over. So if we're looking at something like software and technology, I'm assuming by technology they mean like technology patents. So they're saying, hey, you know what? This has a useful life of 3 to 5 years. And if we're doing a weighted average remaining useful life, it's 2.9 years. And we're marking it down. The carrying value right now is about 190 million. So this is kind of just a nice little visual right here of what's going on with their intangible assets, what's going on with these amortization expenses, and just the remaining expected useful life of these assets. Now let's talk about operating lease right of use assets. So this is basically that final line item right there. So businesses, they're leasing an asset just because, they don't really want to own an asset. Maybe it costs a lot of money to own this asset and they would rather lease it. So businesses, they do not own the asset and ownership is not transferred at the end of the lease unless it's specifically stated so. Now, this can include real estate or equipment, and the amount is basically calculated using the present value of expected lease payments plus the execution of the lease. So I don't expect anyone to really understand this. Just understand that this is basically how they're calculating this amount that they're putting on the balance sheet. Now, this lease, it's going to be amortized over its useful life. So let's say you have like a building, you got like a 10-year lease or whatever. So you're just going to amortize that over the useful life as you're using that asset. So this basically concludes this video, and it also concludes the asset section. Now, in my next video, I'm going to start talking about liabilities. So I hope you guys found this video helpful, and stay tuned for the liability section.